what's the market doing? You might be real proud of being up 5%, but if the market's up 15, you shouldn't be quite as proud. And the reverse is also true. You might be like, oh my God, I'm down 5%, but the market's down 12, which we're actually seeing in a lot of places right now. That gives you context. So I think those are the important things.
Yeah, yeah. Putting it into a language that they can understand, it's easy to digest. It really takes away a lot of questions that they have in their head if it's already presented to them. And, here's the actions we're taking moving forward.
Welcome to RevLabs by PriceLabs.
All
right, Mr. Kevin, Mr. Henry, you about ready?
Yeah. It's kind of like
yes, sir.
waiting for it to stop popping as the people are coming on.
That's right. So they still keep trickling in, but let's go ahead and get it started up. So today, just a little bit about myself. I'm your host. I'm Kyle Driskell. I'm a solutions consultant with PriceLabs. Prior to joining PriceLabs, I worked for a really large property management company in the US. Worked in a couple of different markets, some ski markets, some beach markets, some mountain markets that aren't really ski markets. So I've worked in a venue where you have to report to multiple people. I had to report to my direct boss, had to report to stakeholders, had to report to owners, had to report to individual shops, all of that. So that's a little bit about me. I'm joined by Aditya. He is our Q&A expert today. He's one of our great product specialists. So there's a good chance if you've ever reached out to our support team, you've probably chatted with him before. He's one of the best ones on responding for us. So thank you so much for your help, Aditya. Do appreciate you today. And a little bit about PriceLabs before we get into the real winners of our show today, which are Kevin and Henry. If you're here, you probably know a little bit about us. We were founded in 2014. We currently price 450,000 listings worldwide, making us the leading pricing provider for short-term rentals. We are available in over 100 countries. We're also available in 6 languages. So if you are not in the United States, if you're somewhere global, then you can basically talk to one of our team members in your language. A little bit about our team. We're headquartered in Chicago. I personally live in Knoxville, Tennessee. Got teammates all across the U.S. We also have teammates in Brazil, Portugal, India, Bulgaria, Germany, Philippines, Canary Islands, Netherlands, all over the place to help support you. I know this is about reporting and things like that, but I have to sing the praises of our team at PriceLabs. The number one thing that when I was a customer before I joined PriceLabs that always impressed me was I love the customer support that we got. We've got a really great team behind the scenes that will help you out. And you also have an account manager to work with you as well. So with that said, well, went too fast. Now we're going to talk about our speakers. I've got Mr. Kevin Lincicome with me, and I'm going to start with you, sir. You've got a plethora of experience. If you would take a few moments and introduce yourself to the audience.
Yeah, thank you for having me. So Kevin Lincicome, I started in 2014 with Vacasa, business development, kind of worked into operations, GM, senior GM running Texas. I then went over to Rented, which is kind of my first experience with revenue management, became the director of revenue management for Rented, pricing, gosh, I actually don't remember, probably over 1,000 units for probably 100 different managers. I had a team, of course, helping to do that. We developed a PriceLabs competitor, Art, and kind of left that company, went to Avance Revenue Management, and got laid off there and winded up at Western Trust. Director of hospitality, which is the operations side, but also director of revenue management. So I actually transitioned that company onto PriceLabs, and brought in key data at the time. So pretty well rounded in terms of my experience here in the industry. So happy
Absolutely.
to be here.
We're very happy to have you. And this is the second time you've been on RevLabs with us. You were on one of our previous episodes that my teammate Becca hosted and had one of the better episodes that we have. Our teammate in marketing, Saurabh, just told us that it is the most viewed RevLabs that we have on YouTube. So
That's
Very
awesome.
much appreciate you, and welcome back, Kevin.
Thank you.
All right, and now we get to go over to my man Henry, which if you look at him on this picture, he does not have his big beautiful beard, but he's been working on that for the past couple of months.
Yeah, I
Looking
gotta
good.
update that one. Yeah,
And
thanks,
he's
Kyle.
also
Thanks
down
for.
there at Verma right now. So if you want to share a little bit about your Verma experience, feel free.
Oh yeah, no, Vermon's been great. It's my first conference I've been to, and it's been so interesting to meet some of the people in the industry and just kind of hear what's going on right now. And also learning about all the different vendors that I haven't heard about or spoken to that could potentially help my clients. There's just so many options out there. It was a really great sense of community. Uh, it makes you excited for things coming up. That's definitely true. But yeah, a little bit about me. Thank you again, Kyle, for having me on. I've been in the industry for about 8 years. I started a property management company, helped that from the ground up, did revenue management for that company, and then as of about 4 months ago, I broke off and I started RevUp Rental, which helps property managers throughout the country manage rates and revenue.
And that has been really awesome to see. Just a little bit of background real quick.
Thank you.
I first started reaching out to Henry, we'll say about 7, 8 months ago. He was working for a company that was kind of using PriceLabs a little bit, also using Wheelhouse, and that's perfectly fine. You know, there's plenty of sources of revenue management available. But I actually got to kind of watch him transition over and start up this RevUp Rental. So I haven't actually seen it in person, but I know that, you know, I watched it from the thought process and the implementation.
You were there. Yeah,
This
from the
is
beginning.
really exciting for me to have this conversation and to watch you grow. Looking forward.
Thank you. Thank you, Kyle. Thank you.
Yeah, absolutely. So real quick, just a little view of today's agenda. Before I get into this, let me remind everybody, we will send a recording of this out. So within 24 hours or so, you should get this in your email if you signed up. It'll also be available on YouTube, and then you'll be able to listen to this as well via Spotify or Apple Podcasts or whatever it is that you like. So today's agenda, we're going to be talking about smarter reporting for faster revenue insights. What are the best practices for vacation rentals and the short-term rental industry? We're going to talk a little bit about using automation to streamline your reporting. We're going to talk about some of the best reporting tools out there as well. We're going to talk about how to tailor your reports for different stakeholders, for owners, for pretty much anybody that you may need to report to. We're also going to talk about key metrics and the key performance indicators that help drive better decision making, and also which of those KPIs we're going to share with these different segments. What KPIs do we share with stakeholders? What KPIs do we share with owners? And then finally, we'll also talk about some of the common reporting mistakes to avoid. So with that said, I'm going to kill my screen and stop sharing it real quick. And we can get going in just one moment, if you don't mind. One thing, just a little bit more maintenance, if you will. If you have any questions, please put those in our Q&A area that you see at the bottom. If you want to use the chat feature, go right ahead. I would say that'd be a really good time for you and anybody else that's attending to kind of just chit chat and, you know, maybe talk about where you're from, how many properties you have, maybe do a little bit of connecting in there if you'd like to. But now we have started. We've talked to Kevin and Henry a little bit about their experience and gave them time to introduce. So now let's talk about, to start this off, what are our responsibilities as revenue managers to property owners? One, from our view. So what do you feel your responsibility to these property owners is? And then two, what do you feel the property owners feel a revenue manager's responsibility is? And I will start with Mr. Kevin, if you don't mind.
Well, that's a good question, because they're very different sometimes, what they're expecting and what we want to do for them. I think one of the important things to remember when you're dealing with a property owner, specifically, is we're not talking about the company, we're talking about the owner of the property. Well, my first thought as well is to make them as much money as we can, but we have to remember that there are different owners. And there are different goals of these owners. So it's important to understand what the owner's goals are. I want to maximize my revenue, pure investor, boom, that heads and beds, that's great. But there are others that want to say, I want to make a decent amount of money to cover the cost of this, but you know, I don't want to go crazy here. So maximizing revenue is not necessarily their biggest thing. So having a true understanding of what their goals are, I think is our job. and then trying to meet that. So that's what I would say.
Absolutely.
Yeah.
Yeah, we used to do practice when we would onboard a new owner. We would put those questions up front so we knew how to be proactive with that owner, keeping in mind what they're looking for. And so as long as we were proactive, they were happy. Even if the future wasn't looking too great, we would be able to show them that, but then say, here are our steps that we are going to do to combat this or take advantage of this knowledge. So yeah, I completely agree. It is, every owner's different. But yeah, it's really learning the owner, getting a personal relationship, and finding out what they want out of the service and the property.
Mhm.
So for an owner that is heavily focused on heads and beds, they want maximum revenue, they give you full control, they don't have a minimum length of stay, they don't have a minimum price, maximum price, anything like that.
I
What
love that.
what exact? Oh yeah, that's a dream for us as revenue
I like
managers.
that owner.
Ideal, yeah.
What what is an ideal report that you would give to them on a monthly basis, just to kind of show them, or what KPIs would be on this report for that type of an owner?
Yeah, so something to think about too is if they had a prior year of reservation history, that's something that you can kind of benchmark. And then another one too that's very simple is overlaying market trends and year over year market trends so they can kind of see whether it is going down or up, and if their property is following the trends with the market. And if they're not, then there's something to be fixed there or something to talk about. But that's a big one, I feel like.
Yeah, I mean, I would say probably their bottom line is revenue. So I don't know if owners care if you're getting it from ADR or occupancy, like which one of those two. We love to in the industry talk about RevPAR or RevPAN, depending on your company. But I don't think owners really care about that. They just want to know, well, how much money did you deposit? Like, what's my revenue? And so I think kind of leading with revenue is a good thing. But to Henry's point, I mean, pacing, especially year over year pacing, is great, but you have to have some context to it. Like, what's the market doing? You might be real proud of being up 5%, but if the market's up 15, you shouldn't be quite as proud. And the reverse is also true. You might be like, oh my God, I'm down 5%, but the market's down 12, which we're actually seeing in a lot of places right now. That gives you context. So I think those are the important things.
Yeah, putting it into a language that they can understand, it's easy to digest. It really takes away a lot of questions that they have in their head if it's already presented to them, and here's the actions we're taking moving forward. But yeah.
Absolutely. So that word's super important when it comes to revenue management in general, the context behind the data that we're looking at. How do you provide this context to this owner that we're talking about, the one that's very hands-off? Do you want it to be something that is in an ideal state? Do you want it to be graphical? Do you want it to be more alphanumeric? How would you want it? Would you want to tell the story with graphs and charts? Or would you want to actually have just like a little blurb that's like, hey, the market's down 10%, you're up 5%, we're doing pretty well?
Blurbs are good. Yeah.
Bars.
Graphs are great too, because I feel like owners, when they look at the graphs, it looks like real data instead of just a spreadsheet that they're getting shown. If you throw something in that says key data on it, it's a third-party company, it's more actualized data, then I feel like that holds more weight in the conversation, and just for them glancing over it, it's more of a security thing on their end.
Yeah, absolutely agree. You mentioned key data. Key data is one of the best data sources in our industry. PriceLabs, we have our own data sources and things too, but we look at key data. Pretty much anybody in this industry does. Is there anything that you see in key data right now that helps you with this owner reporting? I think we know that, they've got dashboards and things like that. Is there anything with key data right now that if people aren't using it, you would direct them to kind of take a look at?
Yeah, something that I like to use is a lot for date specific events. Those booking behaviors typically don't match the month averages. So being able to put yourself on a specific day, this is how much occupancy there was at a given point. Let's take New Year's as an example. It was 25% occupied right now, but we if we look by day, you can basically see each week how much occupancy is going to basically come up. Maybe as a month as a whole, it's not the same, but for New Year's Eve in Nashville, when I was looking at it, within the last 2 weeks, almost half of the occupancy came in. So just identifying that and showing the owners that it kind of is like, okay, we know that this is happening. No cause for panic. We do expect more occupancy and demand to come in, and it did turn out true for that to happen. And so it's just another way that they feel comfortable with like the decisions we're making. That's one of the great ways I use key data, is being able to put myself in any spot to see what it looked like in the past.
That's great. Kevin?
Yeah, I mean, the year-over-year pacing for bookings, like, you know, we used to look at that all the time, where it'd be like, yeah, last year, same time, we had, you know, 320 bookings for this much revenue, which is a great report because it not only gives you like the number of bookings, it gives you the revenue pacing in that same booking report. But yeah, I mean, it's one of those reports that you have to be careful looking at as well. I had built out my own, where I would download all of the bookings, and instead of looking backwards to say, oh, you know, like, here's a pickup report. Oh, here's the last 2 weeks. This is what we got, and this is. I actually like to look at it a different way, in terms of, I'll look at the next 2 weeks forward and say, last year, where did they book? So the next 2 weeks forward, and it populates a bar graph to say, like, here are where they were booking, and you'll start to see trends that way. So looking backwards is great to say last year over the last 2 weeks, but then last year over the next 2 weeks, what am I expecting to see? So yeah, those kind of booking reports are fun.
Yeah, that's a great tool. And then you can overlay the occupancy trends, and you can kind of adjust for looking forward what you expect it to be at. No, it's a great tool. And for owners also, Key Data has this one KPI that shows them their owner lost opportunity, basically, and all the blocks and all the owner stays. And I think that that's a great tool. I use that with property managers and owners. It's great for financial teams as well, because, you know, it's not something we should expect every time we get a home. We expect a full year of availability, full year of days to book, and then factoring that in, sometimes it's a surprisingly big chunk. And so it helps you make decisions in the future budget wise, to kind of expect to not be able to make that revenue. And then on the flip side too, I use that to show the owners, like, hey, it looks like you're not hitting your goal, but half the month was booked. So we have to kind of account for that, because we didn't have the opportunity to make revenue on those days. And that sometimes is a nice little wake up call for them. Sometimes they don't always understand that too. So it's a good tool to explain it.
And actually, piggybacking on that in terms of opportunity, PriceLabs has a pretty neat little new report that gives you the amount of revenue opportunity available in the future. So when I started to look at, like, oh, we're pacing ahead, like, oh, we're you know, really ahead. But whenever I look at key data, I actually always look at year over year, but then I look at the final. So I might be ahead for year, but I still have this much to go. You look at, like, oh, you're pacing ahead, but we're like 3 months out or 4 months out, and I still need to get to here. Well, you look at PriceLabs, and it'll tell you that, you know, hey, by the way you're priced, you're not going to make it. Like, you're priced too low, or you gave it away, you know, to get you to pace ahead. You've kind of underpriced here, and now you're going to be in a little bit of trouble the next 2 or 3 months. So knowing what you have left to sell is equally as important as what you already sold. So
absolutely. Yeah, it helps you if you need to know what kind of ADRs and targets you need to hit to fill out that month. I'll check out the PriceLabs tool. That sounds great. I've been doing it manually in a spreadsheet, but no, it is a killer tool, especially if you need to know the occupancy left, then you know the ADR you need to get per booking, and it helps you kind of track that just on looking at bookings every day. But sorry, just a little piece.
You're good.
Yeah.
And I'm gonna get my fishing reel out. We're gonna reel back the PriceLabs report. Yeah. I will talk about that here in a little bit, but we won't focus too much on that. One thing I do want us to talk about, though, before we move from owners to state form property owners to the stakeholders is, what metrics would you not want to share with an owner, if there are any? Meaning, is there a metric that you think is great for us to understand, but maybe isn't quite as good for an owner to understand? Now, one thing I think about is RevPAR, because we have to come up with another explanation and say, hey, this is occupancy plus your ADR and all that. Now, if it's up, obviously, yeah, you can include that in your report because it's just a green number. But is there anything else that you can kind of think of that maybe you wouldn't necessarily want to show to the owners?
I'm trying to think right now.
Yeah,
I didn't prep you all for that question.
Yeah,
I kind of threw that one out as we
being
were thinking.
transparent. I will say that, you know, I don't think I'd want to go down a lot of rabbit holes of cancellations and things like that. Unless there's an obvious, like, hey, there's a pandemic, everyone's canceling, that's why. You know, I mean, that's an obvious one. But like, if you're finding a lot of cancellations, for no apparent reason, it's not good. So I mean, I think there's that, but I don't know. I think being transparent with owners is important.
Yeah, I'm trying to be proactive to mitigate those conversations. Definitely. Sometimes I could see where if an owner reaches out to you and the ADR for the market is higher than theirs, that wouldn't look
Right.
so great, or occupancy. Another way you can look at that is saying, hey, the market year over year down in ADR, let's say 10%. And so that could help explain, why their ADR isn't performing like last year. Sometimes the data is a little bit skewed, especially if you're using scrape data. So that's an easier way to kind of just get across that we know that the market's down and we are coming back to combat it, without giving them a hard number and creating more questions.
Yeah, and I will say one of the important things that I do like to share with owners, or something that you can use is a like a tourism bureau, or to give supply. So for me, telling somebody supply, everybody out there pretty much understands supply and demand. What they don't understand is when you tell them the ADRs. So ADR is average, remember, and you might have somebody that thinks their house is above average, and it's not. And so it's very difficult to say, yeah, the market's average is 500 a night. You don't own that. You own the 300 a night kind of a house. So throwing in those hard numbers, I think, can run you down a rabbit hole that you might need to do some explaining. Whereas if you say, hey, supply is up, we used to price a market that the number of units nearly doubled, right? They built, it's a small mountain ski community, and there was a huge amount of building. So inventory doubled, demand didn't. Demand's still the same. And so, those are things people that owners can understand, is like, hey, we're going to have to be a little bit more aggressive in terms of competition. This is new and shiny, yours is not. So what we have the advantage of is we've been a little bit more seasoned on the OTAs. Maybe we can book some people at a decent rate a little further out.
Yeah.
Those are the higher level two clients, or owners. You get all different levels of owners and how touchy they are. Some owners I've managed their homes for 5 years and I never heard from them once. Some I manage them, for a year, and you hear from them every week. So it's you really have to cater it in that aspect. So having pre-built reports really helps that out. Owner reporting, automated reporting that gets shot out. That's always great.
Yeah. So real quick, we're gonna transition away from the owners and we're gonna get into the stakeholders. But before we do that, how often do you, in an ideal world, communicate to your owners what's going on with their portfolio?
I'll go.
Whoever wants to jump.
Once a week, heavy reporting. At least once a week. That's when you're getting all the main KPIs that major stakeholders want to see. You want to see pacing, you want to see, number of check-ins coming in, number of bookings week over week, see if, whatever changes we were making are working, or if they're not working, what dates in the future are getting picked up right now. That kind of helps marketing for kind of targeted marketing. But it's, definitely once a week is a heavy outlook on everything. And then through the week is, making adjustments per segment of your portfolio that you're managing. But yeah, once a week, very heavy. And then quarterly to that extent is more bigger, broader views, company views.
Awesome.
We went in ours, weekly is important. So every week we would have a meeting. But we did monthly, kind of that 30,000 view
Mhm.
of what's going on. One of the things I think that is, have a calendar of events, but look at the annual booking trend, and then work with marketing to figure out, well, here's when we need to send these emails out, or here's where we need to blast this market for this period of time, and coordinate that. So that sort of report is, I think, important when you're dealing with sales and marketing.
Absolutely. Okay, so real quick before we get into the stakeholders, we've talked about key data, we talked about PriceLabs, we talked about Wheelhouse, we've talked about people that have their own internal reporting systems. Have you all ever had to experience anything like your own built out data source, or really relying on pivot tables, Excel, Google Sheets, those things? And how did you go about reporting when utilizing those? Guess think of it as if you don't have a tool right now, and obviously if you don't have a tool, hopefully, and you're listening to this, we do get with key data, get with PriceLabs, but if you don't,
one.
What's the best way to go about that, do you think?
I'm a big fan of like Power BI, actually. I think you can build some beautiful things with Power BI. I'm not the person that can do that, but I've used it once they've been built and I can tinker. But yeah, I do think I would say to anyone listening out there that doesn't have key data, or PriceLabs for that matter, because you're getting a little bit more and more ability to find market data. But like, unless you can benchmark it against the market, you're blind. You're still, we used to say, don't cheat off a D student. It's the same thing, that if you're just looking at your own numbers, you don't know if you're the D student, so look at market. So key data, I think, is very, very important. PriceLabs actually is gonna, if for me, my own, if I had a small company, I actually would look at the neighborhood data, and maybe accept that as my market. Like, you really can start to rely less and less on key data. But yeah, I do think that you need to have some sort of context to how you're doing against the market.
Yeah, absolutely.
Yeah. One of the so I used to do everything in Excel, and I would build these huge reports that they were just too much. And if one problem happened, then you had to dive into it. What I started using, a buddy of mine, Doug Truitt, he showed me Looker Studio. And I love Looker Studio. So basically you just take reservation analysis reports. I pull one report, throw it into a Google spreadsheet, and then on another page I have all the homes details, and then it auto populates to that. And then in Looker Studio, for my clients right now, I can customize each report to show what they want, and then I can also put their logos up there, their colors up there, I have reports that show them internal pacing. So it's for the higher players, like the founders. They want to see kind of where they're pacing to goal, or maybe year over year. They want to see which homes are performing the best. And through Looker Studio, they make it really easy so you can filter through everything. And then I also have ones where I pull from key data, and so it shows them against the market. So that's like a separate market report. I send those out about once a week, and people love them just because they're so easy to use. It's easy to navigate. They can pick a certain subsection of their portfolio and check that out. How's that doing? I show the past 7 days on there and how it's performing to the previous past 7 days. And then also whether we're comparing year over year or to a budget that they've given me, it will show kind of the pacing to that. So it's an easy way to identify struggling units for me and the owners. It's really easy to go on a video call too and just walk through it and look at it very quickly. some of the softwares and data softwares that we have right now, you might have to do a lot of clicks. This makes it just very easy. They can see the portfolio. So Looker Studio, highly recommend. It's free. It's easy to use once you just kind of learn the basics of it. And there's tons of videos online on how to help. And it really is a great tool. It's a great way to start out. I'm trying to branch out and build it bigger, maybe have more direct sources of data, but it is a great tool for anyone that is starting out. I highly recommend checking out Looker Studio. It's by Google.
That's fantastic. I personally haven't heard of it, but we'll definitely be looking into it. That's great.
Yeah, I'll send you one of the reports, and you can check it out. They're really cool.
Yeah, if you don't mind, that'd be great.
Yeah.
All right. So with that, let's transition a little bit. We are running a little bit behind, and I want to cover this talking to stakeholders aspect. So we started our interview today kind of talking about what is it that you want to tell the property owners. What are some of those KPIs that you want to show them? We just mentioned something you may not want to. It's a very different beast when we are talking about the stakeholders, the C-level executives, within a larger property management company. So if you're reporting to those types of folks, what are you really trying to convey more than anything? Obviously, we're trying to support that we're doing a good job as a revenue manager, but what is that C-level executive looking for, mainly from us in our reporting? And I'll start with you, Kevin.
Well, I think the what's the company making, revenue is a big thing. But a kind of lesson hard learned by me was I was pricing a market in a certain way that was making a boatload of money.
Mm-hmm.
But I wasn't pricing for profit. So was a great lesson for me to say, hey, step back, booking values and things like that. So it became more important to look at like the number of arrivals, how much money in fee we were taking, because the owner cares about their revenue. That's it. They don't really give a crap of what it costs you to clean their place. They just want it clean.
Yep.
Whereas we need to understand that like, 15 bookings for this little period of time is a lot more work than 5 bookings.
Yep.
So like length of stay becomes an issue. The average booking value becomes really kind of important. How many arrivals or departures, whatever you want to look at. So those sort of things, when you start to get into the little bit more nitty-gritty things that affect or start to take into account the cost involved in these bookings, in the operation, that's what I think becomes important.
Yeah. Piggybacking off that, absolutely, the number of check-ins per season, that's huge for them because they need to know how many employees to potentially have. The other thing too is the average stay cost, like you were saying, if it's going up or if it's going down. You might add more units to your portfolio that are 1-bedroom condos that might bring it coming down, but it also gives them a sense of how much money they're going to be making on those turns. And you can also kind of project out how many bookings you expect a unit to have. So that helps out a lot, especially if you look at year-over-year number of bookings dropping, and you can kind of help them forecast that. And then total revenue, yep, that's definitely what they want to see. They want to see all the money coming in. Number of stays just is the perfect way to look at, cleanings, fees, everything along those lines. It really breaks it down. And then something else I've dove into a little bit is accounts payable, looking at reservations in the past that still have basically money to be paid. Sometimes that gets slipped through the cracks more often than not, I feel like. And so that's always something every once in a while to check in on, just to make sure that you guys are going after what you're owed.
Yep. One thing I would add to what you all have said as well is, for me personally, to support myself as the revenue manager, I would talk a lot about what's happening in the market with them and say, hey, booking windows change, it's compressed 20 days, length of stays, get those types of conversations, I think are really, really important with stakeholders, because they don't have the opportunity to sit there and, dial in the data like we do and understand that, hey, Thanksgiving moved weeks. That's why we're 60% down during the 3rd week in November, and while we're up 30% the next week, not because
Christmas,
of something terrible with our rates.
Yep. Christmas and New Year's this year is just throwing us all off. No one can figure out when people are going to get there.
Yeah, exactly. And
Absolutely.
then,
Yeah.
you know, my wife is a school teacher. My daughter's in second grade at the same school my wife teaches in. They don't even get out of school until the 22nd this year. So Christmas
Yes,
is going to be a lot of fun to fill in.
Yeah.
Yeah, going along with that too, presenting all of that, it kind of gives you room and the opportunity to, explain why you might be taking risks in some areas. And that is part of our job is, we are trying to predict the future. So, it's calculated risks, but the more information that you give, the C levels, then the more comfortable they are with you making that risk. An example was Super Bowl when I was out here in Arizona. We had a lot of large luxury homes, and I kind of refused to bring the rates down because I knew that 2 weeks out is when they knew who was going to be in the Super Bowl and people were going to be paying $5,000 a ticket.
Yep.
Everyone else in the market got scared about a month out with the larger homes. They started slamming the rates. I just kept them high. And then it happened where within 2 weeks, very risky, I guess, but within 2 weeks, we were getting calls left and right for those homes to be booked. And we were getting incredible ADRs. Like it was, we smashed the competition. We were 98% occupied. So in those situations, presenting stuff that isn't necessarily, just occupancy, ADR, it's a little more outside factor, human nature. That's another way to kind of, basically take a risk, a calculated risk. And I think the C-level, the higher ups, they really like when revenue managers think outside of the box and do a little bit of pushing and nudging just to see, if it does work out. And then if it doesn't, it's a good case study,
Agreed. Agreed. One thing real quick, I'm a sports nerd, so anytime sports comes up, I always have to kind of bounce off of that. I know we're here to talk about reporting, but Henry, that right there is such good advice for any market where you have these massive events like Super Bowl, NCAA Final Four. Even if you're like, let's say you're in Omaha, Nebraska for the College World Series, go Vols, we just won the national championship and we went out there like crazy. So if you went ahead and booked out like a month ago, you got a really low ADR. If you held on until the teams were announced, that's really good advice. So if you're
it was
market,
scarce product.
That's a good little tip to keep an eye on the market, make sure you're not too high, but yeah, absolutely.
And then it made the Phoenix Open the next year much easier to attack because everyone was expecting those numbers from the Super Bowl.
Yeah, exactly. Yeah. So Kevin, with the conversations that you've had with stakeholders, what have you gotten from them that they would like to see more of in terms of, obviously we could talk performance, they're going to say more revenue, get us higher occupancy, less turn and all that. But is there anything that you've presented in a report that you've gotten back from them and said, hey, we need to kind of work on this? Like anything that they've seen that maybe you didn't see?
Yeah. And actually, keeping it to the theme, my last one, kept on asking, well, how are we doing? I don't care about all this. Just tell me how we're doing. And one of the things is he kept on asking for was batting average. What's our batting average? And so I built a very easy little report. It was an export from the leaderboard report out of key data for those of you doing that, and then throw it on a Excel spreadsheet that basically said, and I also gave myself a 3% margin of error. And it was like, what's the average number of units that we're doing better this year than we were last year within a 3% margin? And our goal was like, let's be at the over 50%, doing better more than half of them. Says, Rev Par is an interesting thing because we can be way up, but there's a whole lot of owners that are making less. You know what I mean? Like, that was a quandary that we had in one market. The one market that I was talking about that was oversupplied. We were making a lot more. Our revenue was up. We were doing much better as a company. But the number of people making a lot more money far outweighed the people. There were a lot of people making much less. So our numbers kind of looked good, but they were very misleading. And you have to go to your leaderboard to see that, to say like, hey, you've only got about 20% or 25% of your inventories actually doing really well. 75% of the owners aren't happy with you. And so there wasn't much we could do about that in terms of that. That was the fact. That was what was going to happen with them. The key is to communicate. Hey, there's a lot more units out there. So I mean, I'm not saying that that you can do things of every time these sort of scenarios come up, but knowing about it and knowing why, or having a fairly good story as to why this is happening, becomes important. And those are your supply reports and your length of stay reports and your average booking value reports.
Yeah, absolutely.
Yeah, I like that. I nothing comes to the top of mind of something that was pointed out to me that I wasn't noticing, but something that is helpful is kind of looking at year over year net versus gross income, kind of knowing the difference between that, because a lot of those higher ups too, they're the ones making the deals, bringing on the listings and everything, and they do the underwriting, and so they kind of assume the expenses and everything along those lines. And it really does vary the percentage wise between a smaller unit and a large unit. Smaller unit fees sometimes could be 50% of the stay. Larger unit would be much smaller. So kind of seeing the year over year trend on average can kind of help them give an idea of, kind of one, nightly revenue, what they're going to make, and then two, the total number of bookings. But yeah, nothing comes off the top of my head. But yeah, what you said, that you're exactly right with all that. That's a great point.
So we've been talking a lot about the reporting going to owners and going to stakeholders. We haven't talked a lot about automation when it comes to reporting yet. Automation, to me personally, I don't feel like automation's as important when we're talking about those stakeholders. That one you would want to be a little bit more procured, make sure that it's nice and looks fancy and everything. But automating to owners, especially if you're pricing 400, 700, 1,000 units, something like that, you need to have some type of automation. Right now, in the systems you've used for owner communication, have you all had any automation in there? And if you have, how have you pulled that out? Or how have you pulled it off, I should say? Is it within the software like Key Data or PriceLabs, or are you having to run something else like a AI script or something like that?
And this is for the owners?
For the owner.
Yeah, for the owner.
Honestly, I think the best thing, if I was a property manager, I would enable in owner portal access to revenue reports. And so I've not, Chris, I've not really been very close to the owner kind of level. I'm sure that Key Data does have for the local ops people, and they do have reports that you can set up. And we encouraged our people, like, hey, if you have this high maintenance owner, automate. It's every week. Key Data will send it. You have it specific to their unit, but don't send it to them. Send it to yourself.
Yeah.
Look at it and then forward it over. That's
absolutely.
Yeah.
Yeah, no, Key Data's their owner reporting is great, especially with historical data tagged along. But no, yeah, it definitely is risky just having it automatically send to maybe 150 owners without checking over it first.
I like to hear this answer. So that was what I was hoping for, that it wasn't just spitting out, because we don't know what may be negative that's getting sent out there. So
yeah, and you want to audit it to make sure it's correct. There might be some skewed data in there as well. But and then another automated report is that going back to the Looker Studio, but that's an easy one, because once you do the dump of the reservation info, you can isolate their home and it pulls up all the metrics. It just basically customizes it to them, and you can send it out as a PDF as well. And they love seeing that, especially if the property manager's logo's on it. Looks nice and pretty. It's easy to read. It's user friendly. Those are some big ones. And then they obviously get their monthly statements, and I feel like that's what they look at the most and what we get the calls about the most. I'm not too in on the fee side, but when I used to get calls from owners like that, it was most of the questions were fees, but so they're always getting that. So we have to make sure our reporting, somewhat matches it, or we explain to them that this is a nightly rate number, not your gross revenue number, or the revenue is allocated per night. It's not based on check in or check out. Maybe they get paid in on check in or check out. So really letting them know that, this stay is actually bucketed into 2 different months, but you're seeing it on your statement as just 1 month. That's a little bit of a discrepancy. I feel like I've come across that problem a little bit, but yeah.
Yeah, I 100% agree with you on owner conversations prior to me joining PriceLabs. Most of the conversations were about the fees and how come that money not going to my pocket type of a deal. But hey, what can you do?
Yeah.
We've got about 15 minutes left. So I do want to remind everybody that's listening, if you have any questions, please feel free to put them in the Q&A, and Henry, Kevin, and I will answer those here shortly. Last kind of question that I have for you guys, when it comes to, we talked about the cadence of sending this out, like how frequently would you want to communicate with owners and the stakeholders? What do you think the best view for them is? Meaning like daily, weekly, monthly, but also what time period? Meaning like if I'm thinking about a report that I would send, I would say something like, here are the last 3 months and how we performed. Here are the upcoming 3 months, and then some future dates to look at. Didn't really come off as a great question, but I think y'all might be figuring out what I'm going with. Ideal reporting, what are you going to send to them, and what's it going to look like?
Yeah, you kind of nailed it with it's dependent on how often you want to send each report each month. The owners get their reports each week. Internally, we're using those reports to make decisions, and it does come up to seasonality too. So I have snowbird markets. So right now we're pooling together and getting together, and we're putting reports together for the snowbird season. So we're looking at monthly, long terms, and different outlets to go about that. So it can be seasonal with how you attack the reports. Most of the reports I feel like are generally the same. It makes it a lot easier for multiple players to consume it. You want to make it, easily digestible, but it does fluctuate a little bit based on season outside of the regular reporting that we always see. And then, yeah, it depends on if it's owners, coworkers, or if it's the financial team, because they all want to see something a little bit different. But for the most part, high level, they're seeing all the same general stuff, maybe just a little bit tweaks here and there, depending on which level they are, what group you're talking to.
Yeah.
Yeah, and I would just kind of echo that. I think a lot of it has to do with what you're trying to look at. Back in August or September, I think, is when we started to actually look at specifically December 15th to March 31st for the ski season markets, and say, okay, here we are, here's our pacing. So you're looking at a specific time period, and seeing how you're pacing for that time period. What you just did, the last 3 months it's not irrelevant, but it's not really your focus. I mean, yeah, you want to learn from your mistakes, but if you're in mud season, you don't really care, like, hey, we got a booking. But yeah, I think, but then when you're in the thick of the ski season, then it becomes much more important of looking at a very small period of time. Hey, here's Sundance, in Park City. Like, how are we doing for this week, this 2 weeks or 10-day period? How are we doing? So you become a little bit more focused. But when you're a little bit further out is when you start to really look at a little bit bigger window and kind of where you are in relation to things. Booking windows are shrinking. Everyone has said it. And it's true to a degree, but it also depends on your inventory. There are some things that booking windows aren't shrinking on.
Absolutely.
The other time for internal reporting that's really good, that's somewhat one-off, is when you are trying out new strategies and really watching those, whatever KPIs you're looking to improve, and the performance of whatever strategy it is, so you can go back to your team, show whether it's working or not, if it made a difference. One thing was taking off fees during the slow season for one of the groups I worked with, and tracking that to see if bookings picked up when typically they wouldn't pick up as much, and then also comparing occupancy pickup pacing past like 14 days or whenever you started it to see if you are gaining more ground than the competition. So stuff like that is a little more specific, but internal, and a lot of people internally, they like to see that.
Yeah, absolutely. Real quick, before I get in here and show a little bit about PriceLabs Report Builder, I kind of asked this question in a way by saying, is there anything you wouldn't want to show owners or stakeholders? But is there anything that you've seen is a reporting malpractice? Anything that, you just don't necessarily want to hit with an owner, or, and what I'm kind of thinking of is maybe there's some decision made behind cancellation policies or fees or anything like that maybe you don't want to necessarily report over to your owners. And if you don't have an answer,
Yeah, I
is what
can't
it is.
think of any
Yeah, I can't think
off
of
the top of my
anything.
head.
Transparency, guys, it's beautiful. Thank you all.
Yeah,
Yeah.
no, it's about being proactive with what we do. All of our decisions are data-backed decisions. So if it's data-backed, then we were showing why we were making the decisions. And so it's not so much that we should be scared of showing our owners and clients. We should be showing them. We should be putting it in front of their face so that they know how to properly prepare for the future. Not just our property managers, but the owners too, so they know what to expect. A lot of owners come into the space and they don't know too much about seasonality. And so being able to just, explain that is huge. But yeah, I'll let you continue on this. Sorry.
Kudos. That's a great answer.
Yeah.
Like that you should snip out of this and use it for marketing for RevUp Rental, I do believe.
I would love to. I'm absolutely, Mike, gonna look into that. Thank you.
There you go. So real quick, don't want to spend too much time on this. We don't want this to be salesy or anything. If you are in PriceLabs, we have the new report builder available for you. All you got to do is come up here, go to Portfolio Analytics, and you can see right over here on the right side, you've got custom reports, Report Builder New. You've also got some that are pre-made for you: revenue on the books, leaderboard, segment occupancy pacing, and opportunities. This is a little bit of a view of what the report on the books looks like. So you can see it's essentially an pivot table for you that you can come in here and you can do whatever you want to with your metrics. So occupancy metrics, you've got all sorts of them that you can come in here and click and play with. I love the difference between looking at weekend and weekday occupancy, especially if you are in a heavy weekend market. That's huge. You got booking
Yeah, that's a great
stay
tool.
trends. You've got all of this stuff, including market booking window available for you, market length of stay. We go look at the revenue metrics. This is all of the stuff that you would really want to be able to look at. So rental revenue, same time last year, year over year percentage, the overall last year one. We go down to price metrics. We can see where our pricing is, where our last seen pricing is. This is all going to be your internal views. And then also down here in pickups, this is one of them that I love. We had ADR up here. It's expanded a little bit, but having pickup information here is great. So this is something that you could use if you're targeting certain properties and want to see how incrementally you're increasing it. This can be used greatly. Completely formatable. You can view the report, export it, PDF it. It's also white labelable. So it'll say it's powered by PriceLabs, but it'll have your nice fancy logo on there. And I'm done with that. So now let's get to questions.
I was going to say,
love
this is such a
reports.
wonderful tool. Yeah, this is such a wonderful tool, especially for people just coming into the industry and learning revenue management in the space. It really makes it easy for you to kind of, pull data and analyze it. Just wanted to add that in there. It's great for, yeah.
And it did actually remind me of something that you do not ever want to share with owners, and that's that total revenue number.
Oh, there you go.
Make sure you only talk about rental revenue with your owners.
That is such a good point. Total
Whatever they see
revenue,
on the statement.
meaning we don't want them to know the percentage that the company's making, the fees.
Correct. The booking fees and every other thing that a lot of these companies will
Yeah, it creates more questions. Just whatever they see on their statement, that's how I try to keep it.
Yeah.
But yeah, you just want to mitigate the questions because
But looking at these things here, it's definitely one of those that yes, you can look at your total revenue. I think that brings us back to the conversation of, hey, what do you tell the C-suite people versus these other people? Well, they want to know what total revenue is because we have to pay bills out of out of that, the difference between rental revenue and total revenue. But yeah, don't build a custom report that you send to an owner that says, yeah, we're at
This is how much we
80,000.
made. This is how much
Yeah,
you
we're at
made.
80,000. Well, on me at 60.
Yep. Well, guys, thank you all so much. We've got just a few minutes and a couple of questions in here.
Yeah.
So we're going to go ahead and hit Gabriel and Mohammed's question.
Yeah.
If anybody has another one that they would like to ask, feel free to throw it in there and we'll get to it. So we're going to start with Gabriel's. What are the most effective KPIs to include in a weekly report for company directors and the marketing team to help them make informed decisions for improving observed metrics?
Yeah, like we were saying earlier, number of bookings for marketing, when people are booking. So you're going to be using booking windows. You're also just going to be looking at key dates that are getting booked up further out in advance than not. That's a great way to look at that for a marketing point of view. For higher level ups in the company, they probably want to see more so, yeah, revenue we're bringing in, number of stays, but then also how we're pacing with the market. Because for them, a lot of our job turns into a selling point for the company. How we perform against the market is quite literally a selling point for someone to come on to join their team, because then it shows you, hey, this is how much better we're doing. And if you use tools like key data, another thing that I like to add in is keep in mind that these are professionally managed units we are being compared to. These aren't the mom and pops. These are people with teams that we are going against, which I love to explain to them, because a lot of people don't realize that. Yeah, so those are some killer ones: market pacing, internal revenue, number of stays, so they know how many turns they're making for fees and everything, and also cancellations too. They like to see if cancellations are going up or down. So cancellation booking window, that's something I've been following as well. So that's an interesting one to actually look into, more so than the booking window, just because with the cancellation window, you can kind of adjust your cancellation or cancellation policy based on season. You'll see that cancellation booking window is seasonal, just like the regular booking window. But yeah,
absolutely.
Yeah, and I would just add to that keep in mind that in the question, just know the difference between the reports that you're going to give to the company directors is not the same as the marketing team. They're very different. Just like sales, business development reporting. To Henry's point, yes, we can give you some benchmarking and how we're doing against the market. That's the business, that's growth. Booking windows, trends, that's marketing. Total revenue, operating, total revenue and number of arrivals, that's C-suite.
The other thing too is identifying underperforming homes, because that also helps marketing. If you want to push those underperforming homes, and it tells the higher ups, wait, maybe we should look into these. Maybe we should reach out to the owners. Slow season's coming up. We should reach out to them and make changes and updates. So just another piece I thought of.
That's a really great point. That's a great point to add to it. One other thing that I would mention, just as another KPI that we haven't really talked about, and in PriceLabs, we call it booking pickup. And all it is looking and seeing how much occupancy has gained over the past 7 days and where it's at. I think that's something that could be really useful to give to marketing as well, because it's going to be indicative of the same thing we see with the booking window, but it'll actually show us what happened over the past week and where that consumer behavior is more so than where our behavior is.
Yeah.
So
The pickup report is great. And what I was talking about earlier, the one that I could have custom made for myself, was the pickup report, but the future. Like what can I expect in the next 2 weeks? I think that's a neat little thing too.
Oh yeah, absolutely. Well, guys, that was fantastic.
In Mohammed's question, I would, because I've been looking at that one. There's actually a couple approaches to picking up early, and an old hotel, kind of a hotel approach to things was they used to price, or the approach was to make your really good pricing really far out to get you to a certain level of revenue where you can begin to raise your rates and everything else is icing on the cake. I mean, it tends to be a little opposite of what we do now in the short term. When you have a single owner with a single property that you're trying to price, you want to price a little high, far out, lower it as you come in. So a lot of it depends on what your inventory is, who owns it, kind of the ownership. So if you're vacation homes with 65 units and you own them all, you can take a different approach to your pricing, and that is make them very attractive. Get your 40 or maybe 25-30% occupancy really far out, and then you can kind of take the risks of floating up a little bit.
Yeah, and I'm gonna piggyback off that really quick.
Hey,
Another
real quick,
great
Henry.
tool. Oh, sorry, yeah.
No, good. Let me interrupt you real quick, just in case for our listening audience, so they'll know what the question is. Mohammed from Dubai asked us, he said he has vacation rentals, about 65 units, and he's asking for some suggestions of how to help get early bird bookings. My apologies for interrupting you, Henry. I just wanted to make sure that they were able to know what we were talking about too.
You're totally fine. I'm not super familiar with the market in Dubai, but something that you could do, depending on your ADR pacing, what's getting booked for your units and like kind units of yours, you can look at what it finalized last year, take pacing, and you can look at asking rates into the future, far into the future. And typically people are going to be having a premium. And if that the finalized rate that was booked was much lower, you can get closer. You'll technically maybe be undercutting the competition a little bit, but you're still above that average ADR that it ended at. So that's another way that you can start getting business on the books further out. And if with your 65 units, you know, you can start to see pickup here and there, and you can actually start making adjustments, and it gives you more flexibility to try to capitalize on the traffic coming to your listing, but then also, you know, people seeing this as a high value unit because it's the most value option at the time when they're booking. So that's just something else to look at. Asking rates, ADRs, just checking those out.
Awesome. Well, guys, we have reached the end of this. Luckily, we were only 2 minutes over on time, so I think that is a win that the PriceLabs team is going to be really happy about. So thank you all so much. Kevin, it's been a pleasure chatting with you. Henry, pleasure as always. If you want to chat with Kevin or Henry, reach out to them on LinkedIn. Check out Henry with RevUp Rental. You can also find me on LinkedIn, Kyle Driskell. You can find me pretty much at any of these PriceLabs events. If you do see me, come up and say hi. Thank you all so much for joining us. This has been RevLabs by PriceLabs, and we greatly appreciate you. Have a great day.
Thank you, Kyle. Thank you.
Thank you. We'll see you.
Bye.